You're about to see breaking news that could shake the entire AI market. Nvidia is heading into earnings next week, and what analysts are saying right now could rewrite expectations for the entire trillion-dollar AI data center race, from hyperscalers doubling spend, to supply chain signals out of Taiwan, to looming competition from AMD and custom silicon. This is a moment the markets are watching very closely, and what you're about to hear gives us a real-time snapshot of where the AI boom is heading next.
Thanks so much for hopping on. So just as you look at the quarter for Nvidia next week, what are a couple of things that you and your team are going to be looking at for a sense of not just their own business, but what Nvidia can tell us, let's say, about the broader AI spend right now?
Well, I mean, Nvidia is by far the largest supplier in the market. So I think what they tell us is going to really be a good indicator of where AI spending is right now. And I think they're going to have very positive things to say. So we've done checks in Taiwan. The Taiwanese supply chain is continuing to see upward momentum. Had conversations with people selling into their products in the US. The same thing. We've heard it publicly from the CSPs, right? They are spending more on AI. You've heard from companies like Supermicro, where they're expecting sales to roughly double Q on Q, tied to better shipments of pretty much NVIDIA AI racks. And so I think NVIDIA is going to have really positive things to say about Q3, Q4.
You know, I'm curious how you think about the stock at this point. And I ask because when you look at NVIDIA on a valuation basis, we always have this conversation. It's pretty reasonable, especially against a lot of its peers, and really where the stock has been over the last couple of years. It's grown into that valuation and more than in some cases. How do you think about just the stock today, what you're paying for as an investor? Again, trading about 28 times, which compared to what else you can see out there is not crazy.
Yeah, no, so it's not expensive on an earnings basis. The concern that's been around for the last couple months is just the revenue numbers are getting so big that they require so much spend from these companies putting in data centers, and where's the funding going to come from? And that's, I mean, that is a legitimate concern. Having said that, it's a bigger concern if there's not revenue generated. And if we had this discussion a year ago today, you would be pointing out the fact that a lot of this infrastructure is going to supporting training, which doesn't generate revenue. But now what we're starting to see is that inference workloads are building. Those are what generate revenue. It's what generates profit. And it should be what funds that debt that's being used to pay for these data center buildouts.
And then thinking about NVIDIA specifically and their product roadmap, what are you expecting to see in terms of the discussion around Blackwell sales versus thinking ahead to where Rubin fits in and just NVIDIA's own product velocity here?
I think at this particular venue, right, their Q3 earnings, we're going to hear a whole lot more about Blackwell. With Rubin, it's really starts as a second half 26 story. I think that we see the larger revenue get generated in the 2027 timeframe. So it's still a bit out. Rather, where I think we're going to get tangible, better results or better expectations is the B300, right? So their next iteration of Blackwell, where it sounds like things are ramping really well.
And then finally, just on the China side of it, we still see that story just a little bit, just unclear, I guess. I feel like I kind of lose track of exactly where we sit, other than it doesn't seem like NVIDIA has any visibility into sales in China. How are you thinking about that part of the story right now with those, non-realized revenues, let's call them, now seemingly comfortably into the tens of billions of dollars?
Yeah, I think everyone's taken China revenues out of numbers. And so if at any point China becomes an opportunity again, that's all a bonus for NVIDIA. I think the other thing to think about, though, is one of the concerns had been that you'd end up with these dual tracks where you've got a China track and a US track, and that China would really offer other countries a path to AI if the US didn't. What we're starting to hear, particularly this week, you had the Wall Street Journal talking about the fact that China has some bottlenecks. And so, well, it's not a great thing that Nvidia still can't sell into China. From an Nvidia perspective, I think some of the concerns around might there be roadblocks in other countries, or could China potentially pick off some of the revenues in other geographies, that some of that fear should be dissipated.
So, here's what matters, and why this clip is far bigger than just another earnings preview. Nvidia remains the single most important indicator of global AI infrastructure spending. When their supply chain in Taiwan shows momentum, when US enterprise partners are doubling orders, and when hyperscalers like Meta, Amazon, and Microsoft keep aggressively building out their racks, that tells us one thing: the AI arms race is nowhere near slowing down. But the real signal here is inference revenue. A year ago, AI spending was mostly hype-driven training. Today, workloads are shifting toward real monetization, meaning the massive capital spending might finally start paying for itself. Competition is rising. AMD's new rack-scale solution, custom chips from Google, Amazon, and Microsoft, but none of it has dented Nvidia's revenue trajectory so far. And the China angle? That's the wild card. With tens of billions in removed revenue assumptions, any opening in that market becomes pure upside. This is exactly why this clip matters. It's not about Nvidia alone. It's about the health, direction, and sustainability of the entire AI supercycle.
Shares bouncing back this morning. The company set to report its quarterly earnings after the close next Wednesday, November 19th. Our tech editor, Dan Howley, joins us with what to watch when those results come out. And Dan, part of this, we saw Jensen Huang recently make some comments that seemed to indicate an even rosier outlook than he had already. Are we going to hear potentially more about that with this earnings report?
Yeah, I mean, that's kind of what everyone's looking for, right? I mean, this is the bellwether for the AI trade. And, whether they beat expectations or miss expectations, you can expect a cavalcade of knock-on effects for different AI stocks. And so, there's a number of kind of threads here with the kind of Nvidia earnings report. The first is, this is the first report that we're seeing since SoftBank unloaded their $5.8 billion worth of stake in the company. They obviously did that to kind of pay for their own AI endeavors. They're working with OpenAI on that massive Stargate project, things along those lines. It's also the first we've heard from Nvidia since the AMD financial analyst day, where CEO Lisa Su had said that she believes that the total addressable market for AI data centers will be $1 trillion by 2030. And then also, just kind of somewhat related, but more related to the broader AI trade, is Michael Burry coming out and saying that he believed that some companies were exaggerating their earnings by kind of elongating the depreciation of some of their assets when it comes to their data centers. And so there's a number of, like I said, threads going on when it comes to this actual report. But, by the numbers, we're expecting EPS of $1.25. That would be up 54% year over year, and revenue of $55.1 billion. That would be up 57%. Now, I just want to point out that it would be better than the prior quarter, Q2, which was up 55.6%. But, Q1 2026, that was 69%. Q4 2025, that was 77%, and so on and so forth. And so
This is TheCryptagon. Stay sharp, stay informed.